Will be trickling on as time goes on, but we're just gonna, for the sake of keeping it fast tracked and having everybody done in 1 hour, we want to get the ball rolling here. My name is Joe Fergali, and along with me is Dave Farrell from Paycor. And we'll go ahead and do our formal introductions later, but I just want to kind of get a couple things out of the way for housekeeping. Everybody should have received handouts, so hopefully they received the handouts prior to this meeting or this webinar. They're also available. If you look on your screen, you can download them as we're actually talking, and you can gather the handouts from there. There's 3 handouts total. The handouts that feature the tax forms are extremely handy, and it's beneficial if you have those printed out prior to us getting started here. Because when Dave is going over the various filings and the forms, it's good to be able to keep focus on the screen for the webinar and then use the handout and probably jot some notes on it as well. The other thing that we'd like to discuss is for questions, and again, for the sake of keeping this fast track, we'd like to leave all questions to the end. That is when we will unmute those that have questions, and we can go have Q&A verbally. If you have a question that does, that you want to just ask as we're going along, you can go ahead and raise your hand, and we can try to address it then. But we'd like everybody to raise their hand towards the end of the presentation. So with that, we're going to move on. We'd like to welcome everybody on behalf of Creative Benefit Strategies. Tell you all a little bit about our firm. Our parent company was established in 1980, and then in 1997 we brought another firm, and I guess we consider it a melting or a merging of our parent company as well as this other firm into what's now called Creative Benefit Strategies. We bring a ton of experience in both employee health and welfare as well as retirement plan, employee benefits to the table, and our client size is anywhere between 2,000 and 4,000 employees. We are independent in design, meaning we don't have proprietary products. We offer brokerage services, and then we also have HR consulting available where if someone has questions, specifically perhaps even regarding this, they can come to us for answers. We look at ourselves as a boutique firm that leverages a lot of technology to help our clients along. For this presentation and for a lot of these new, what I consider curveballs that are being thrown at us, we've partnered up with a company called Paycor, and Paycor was founded in about not too far from behind when Creative Benefit Strategies made its debut. Founded in 1990, has 28,000 clients nationwide. They offer a suite of services. Their main focus is payroll and payroll services. Clients, between 1,000 and 5,000 employees. And they're known for their technology and leveraging of technology, as well as what I know for a fact in their realm is their service. They gather a ton of new business from new clients that are quite unhappy with the service that they received from their prior payroll company. They hang their hat on that. In fact, they've won a couple of awards in regards to service. So we've reached out and we've partnered up with a company called Paycor. One of the reasons is wealth of technology and using this approach when it comes to this challenge of the 60-55 and 60-56. And the bigger thing is that we've seen our clients as well as insurance carriers consulting us saying it's our responsibility as the benefit professional, or it's the payroll company's responsibility because they have all the data. We figured that we're going to partner up with Paycor and kind of solve the situation, because between Paycor and our firm, we have a lot of the data required to complete these forms, and we could, get a head start and then involve you. Hence, you leveraging our time and getting ahead of the curve. We always have to have our disclaimer in there, which means consult a professional. If this is regarding any type of tax or legal issues, we'd like for you to consult your CPA or your attorney. I, as an afterthought, put these next 3 slides, actually 4 slides in here, because one of the things that I find as any type of government program like this, a major overhaul goes through, you get your classic government acronyms. It started out really as 2 pages, and then it eventually went to 4 because they just keep growing. We put it on here as a reference. We put it on here as a resource to you. We're not going to go through these 4 slides. I have highlighted the terms that are going to be used in this presentation in red, so you can refer back to it if you print off the slides in color format. If not, at least you have a one-stop shop for a lot of these acronyms. My guess is that by the time the year is over, the 4 pages will probably grow to 6 or 10 pages of more acronyms coming at us. But I wanted to at least have them on there as a resource to you. So before we get going, we're going to break this down into a couple of sections. We're going to break it down into a brief review of the Affordable Care Act, how it's going to affect employers, and then we're going to literally talk about the forms and how they're going to affect your workload, what your employees are going to be expecting from you, and quite frankly, what the Internal Revenue Service is going to be expecting from you. I've heard Dave, our speaker, present this to benefit professionals, and I think he did an incredible job for a couple of reasons. I think he was pretty right to the point, and if anybody knows me out there, you know that that's how I speak. It's right to the point. Let's get through this. Let's get through the fluff and get right to the nuts and bolts of it. And the other thing that I think Dave delivered was a simplistic way of viewing it, and then also pretty welcoming when people had questions. So he does a really nice job at getting through the forms, getting through whose responsibility it is, and that's why I wanted to bring him to the forefront for our clients and prospective clients to listen and hear what he has to say about these forms. So we're going to review the Affordable Care Act, we're going to go through the forms and whose responsibility it is, and then we're going to wrap up by just talking about how we can help you. Before we get started, I just wanted to again introduce myself. My name is Joe Fergali. Been with Creative Benefit Strategies, the parent company, since 1995. I moved here when we all moved here and came together as one company under roof here in Des Plaines in 2006, and I work primarily in the benefits division. Clients from literally 2 lives, 2 employees to 4,000. So we're all kind of all over the place, so to speak, but we're here to serve any type of client size. With that, I'm going to introduce our speaker and our presenter, Mr. David Farrell. He is a regional director for Paycor. David helps clients create efficiency and reduce costs and engage employees at a higher level and keep them compliant. He's here to talk today about the 1094 and the 1095 forms, as well as how they reflect to the sections 60, 55, and 56 of the IRS code. He works with groups in the Chicagoland area, 1 to 5,000 employees. He'll come up with better solutions for HR. Paycor, again, focuses mainly on payroll, but they reach out to the HR arena as well. And a large part of Dave's responsibility now is education. And it's education to business owners as well as professionals like myself on ACA tax compliance and strategies. He's our partner. We're excited to have him here today, and actually excited that he's still awake because he has a newborn. And he was up late last night as the newborn was up late last night.
Yeah. And early this morning too. So
he's looking for some sympathy.
Yeah. So if you hear some snoring, hopefully it's not Joe. It's just me. So thanks, Joe, for the introduction, and welcome everybody to the call. Again, I'm David Farrell from Paycor, and Joe and myself and Dustin Pudwell, who's with us here in the room from Paycor, we're really excited to share this information with you guys today. And how exciting is it to talk about tax forms, right? So. I think what's really happened with the ACA is that we're now entering a phase where employers understand that what insurances they're going to offer and how they're going to comply with ACA regulations. But what's really coming down the pipe now for employers with anybody from 50-plus employees, right, or applicable large employer status, is that you've got tax returns that are now due at the end of this year to the IRS. And so now it's not only are we going to comply, what insurances are we going to offer people, but it's, okay, what are my responsibilities from a tax implication standpoint? And so we're going to do a little bit just of a high-level review of the ACA. We're going to spend a lot of time on the tax forms today. So, the IRS needs to know from employers that they're complying, see, that's the lack of sleep there, complying with the law, okay? And so what they want to know is who has coverage, right? Because as individuals, we need to carry health insurance coverage. They want to know what kind of coverage these individuals have, and they want to know where they got it from, okay? And so they want to make sure that the employers are doing what they need to do to provide coverage to employees. Because if an employer doesn't provide you coverage, then you're going to a state exchange, right, and getting insurances that way, and getting potential subsidies. I know there's a big court case going on right now to see if those subsidies are going to remain in place or not. That's sort of to be determined. We're going to talk about employer responsibilities today as far as insurances and the tax returns. So, again, the Affordable Care Act was designed to ensure that every American has some sort of insurance coverage. They can obtain coverage through two ways. First is through the marketplace, and again, those tax credits are available for individuals to obtain affordable insurance. And secondly, they can select or elect coverage through their employer if they work more than 30 hours or more. So the IRS added tax returns and reporting requirements to make sure that people and businesses are complying the right way. And so a lot of times when I first connect with a potential business or customer for Paycor, what I hear is, what are you going to do from a 60-55 and 60-56 standpoint? And really that's the wrong question, right? So the 60-55 and 60-56, we are largely not talking about those. We're largely talking about the actual tax returns itself. So 60-55 and 60-56, those are the sections in the IRS code book that all of the tax returns bubble up into. So we'll talk a little bit about what those sections are, but I would tell you that you really need to focus on the 1095 and the 1094. So the 60-55 is actually the individual mandate. So what this says is that individuals need to maintain minimally essential coverage or pay a penalty out of their tax returns for not carrying health insurance. So that's the individual mandate. The 60-55 reporting, again, the tax forms bubble up into the 60-55, is necessary to determine that individuals have health insurance coverage. So returns must be filed with the IRS, and statements must be furnished to covered individuals. The 60-55 information that's required, this is going to be things like name, address, social security number for the employee and any covered dependents, if applicable, the name and address of their employer, if that's where they're getting their insurances through, indicator of whether the plan is sponsored through a small business health options program, and then the months that each individual is covered. So again, individual mandate is 60-55. That is in place to enforce that individuals have coverage, and if it's coming from an employer, what sort of employer information they have. So the 60-56, this is requiring all applicable large employers to file returns to the IRS and provide employees with tax returns about the coverage that they have. So this information is used to determine that the employer is staying compliant with what is called the employer shared responsibility. So individuals are supposed to get coverage, and employers share responsibility in getting those individuals coverage, because if you're an applicable large employer, you're supposed to offer insurances to your employees that are full-time equivalents. So information fairly similar to what was required for the 60-55. And that's simply name and address of the EIN, a name and address of the full-time equivalent, its months that coverage was available, and any sort of contribution rates. So it's a little more detailed, and we'll go through that. But effectively, it really breaks down into what tax returns need filed with what. So if you are a small employer and you're self-insured, you're going to file a 1094 and a 1095B, okay? If you are the insurer is going to provide a 1094B and a 1095B. We are largely going to talk about the 1095C and 1094C. So the way that my brain can handle and understand the B's and the C's is I really think about this. Your company, if your company is providing health insurance and you are working with an outside insurance company, so that's a large employer with a fully insured plan or a large employer with a self-insured plan, you are C, you are the company, so you're giving the employees the 1095 Cs. If you are self-insured and you're a small employer, or you are the insurer, you're providing a benefit. So I think, C, company, B, benefit provider. So just some ways to think about it. And then I've also attached in here the deadlines as far as when these are due. And I think this is what's confusing a lot of employers. And as we go through this, we'll talk about the information that you need to track monthly, but that is really it. These are annual tax returns, but they're annualized. They're annualizing the information that employees have on a per pay period and mainly monthly basis. So I feel like there's this big tidal wave that's headed towards our shore, and that is come January, when you're supposed to get these 1095-Cs out to employees, a lot of employers are going to be trying to stuff 12 months worth of work into 1 month. Really, ACA reporting should be something that you're doing every month, right? So, if you think about your payroll, you're doing your payroll every, pay period, and then on an annual basis, we're doing a W-2, right? So the W-2 is a summary of your per pay period information. It's really the same philosophy here. Every month, you're going to have to track the insurances on an employee, and then that's reported annually. So if you're waiting until the end of the year to solve this, that is a huge, huge issue. It concerns me because I know our partners from an insurance agent standpoint, like Joe, are going to be stuck trying to gather information. I'm concerned for our accounting community partners because these are tax returns. And when I think of tax returns, I think of accounting, right, in my CPA. And so you guys are taking a proactive measure here, and thanks, Joe, for having us out. Don't grab this information today and then sit on it and wait until December and January to have a plan in place. You've got to be proactive about it, and you've got to be proactive with your company to make sure that you're doing this the right way. So just a quick review. I know you guys can see this, but these tax returns are due to the employees at the same time that your W-2s are. So your employees, if you're an applicable large employer, are not only going to get a W-2 from you, they're also now going to get a 1095-C from you, and they're due out by January 31st, due in the mail. All right, so let's talk about penalties for not filing, right? So surprise, surprise, this thing's going to be a huge revenue generator for the IRS, right? I've heard before that the IRS's goal and the Department of Labor goal is to audit every applicable large employer by 2019. So if you think about that, that's an aggressive stance that they're taking, but there's a return on their investment. They're going to find people that are doing this the wrong way, and they're going to tax those people and penalize those people, right? I mean, if you're off by a couple pennies on your payroll deposit, they can hit you with a tax penalty, and they're going to do the same thing here. So the penalties for non-compliance, penalties range from $30 to $100 per return. So a return is a 1095-C. So if you have 100 employees and you're giving out 100 1095-Cs, right, 30 times 100, what are we talking about? $3,000 there, right? So that can be a pretty big deal for an employer. The IRS was nice enough to cap this at $1.5 million, so your exposure doesn't go that far. And again, these are penalties on the tax returns. These are not penalties for non-compliance from an ACA standpoint, meaning you didn't offer insurance that was affordable. This is a whole other set of penalties and requirements that you have to adhere to. And there's a special relief for 2015. This is another sort of education point for everybody, is that we quite frequently meet with people that have between 50 and 99 employees, and they tell us, well, I don't have to worry about ACA reporting until 2016. And quite honestly, that's incorrect. The IRS is asking that if you have between 50 and 99 full-time equivalents, that you still file tax returns, meaning that the 1095-C and the 1094s this year, meaning January of 2016, but they won't penalize you if you don't. So they're saying, make a good faith effort, report the tax returns to us. If you do not, we will not give you a penalty. And the way I think about that is, do you really want to invite the IRS into your business in any regard, right? So maybe they slap you on the wrist for this, but if they find something else going on that you don't want them to find, that's probably not a great idea either. So let's get into the actual tax returns themselves, right? The most exciting part of the presentation, the tax return part. So the 1095-C, this is what an applicable large employer will need to give their employees that are full-time equivalents. So 1095-C, let's start at the top. You guys should have these forms in front of you. That's my best advice for you because I've chunked them out. And it's probably easier if you've got them in front of you than to look at every line item I have on my screen. But still pay attention, right? So the 1095-C, the top portion is really employee information. So this is your employee's name, address, their social security number, and then your employer's information. So this is name of the employer, their address, their EIN number. And the big thing that I want you to understand about these forms is that this data to populate these forms is going to come from as many as 4 different places, depending on who you're using for payroll, who you're using from a time and attendance standpoint, who you're using from a HR administration standpoint, and then obviously there's some information that you as a client would have to provide in order to complete these the right way. So I'm gonna chunk that out for you here next. Right? So lines 1 through 6, this is employee information, including the social security number. That's going to come from your payroll functionary, let's call that. Whoever's doing the payroll, internally or externally, they'll have this information on the employee, and then potentially your benefit provider would have that as well. Right? So already we've got information from 1 through 6 that could come out of 2 places. Employer information, that's going to come from, again, probably payroll and your benefit provider. And then line 10, this is one of the more interesting lines on these tax returns. This is the client data. So when I say that information is going to come from 4 places, one of the places is going to be you. So you, as the applicable large employer, you're going to need to put the contact name and phone number of someone at your company that's willing to talk to the IRS about these tax returns. It cannot be your benefit provider. It cannot be your payroll provider. It's not going to be your insurer, and it's not going to be your accounting professional. So, what I always tell people is pick the guy that you hate the most, and let's put his name and phone number on there, right? So, interesting little line. All right, let's go to section 2, and this is the more complicated of them, and this is where we're going to need to prove on a monthly basis what sort of insurances we're offering employees. So, section 2, line 14, offer of coverage. And we're going to go through the codes here in a second, so you're just going to have to trust me on this sort of thing. But we need to notify the IRS what sort of offer of coverage did we make this employee, right, by month. So you notice January, February, March, April, May, and then I have the option of doing all 12 months. So let's imagine, if you would, that for the first 6 months of the year, it was just me and my wife, right? And then we had our little baby girl. Well, my offer of coverage is going to change. So that's why on a monthly basis, you really need to stay on top of the changes in employees' insurances. You're also going to need to notify the IRS in line 15. So I want to make sure I don't skip ahead here. That information is going to come from the employer, and it's also going to come from their benefit administrator, right? So the offer of coverage. And think about it this way. If you're doing payroll and payroll only, you're just going to see the deduction amount. You're going to see the $150. You're not going to know that that $150 is employee only, or employee plus spouse, or employee plus spouse plus family. You're just going to see the dollar amount. So that's why this information is not really going to come from payroll. It's going to come from your benefits administrator, or it's going to come from somebody else, maybe HR within your company. Okay? So line 15, you need to report the amount of employees' share of the lowest cost for self-only coverage. So this is where we talk about minimal essential coverage. This is where we talk about affordability of the Affordable Care Act. So you need to say, I offered this person this insurance, and this is how it was affordable, right? And so there's a couple different ways that you can determine affordability. You can use last year's W-2. You can extrapolate this year and model it and say, well, David's made $5,000 so far for the year, and 9.5% of $5,000 is X amount multiplied by the remainder of the year. You can use the federal poverty level of 9.5% of the federal poverty level. But that information of what your offer of insurance was is going to come, again, from the employer or from your benefits administration tool. And then we also have safe harbor codes. And so we'll talk about safe harbor codes in a second too. But the safe harbor code is effectively in relation to the offer of coverage. This is notifying the IRS and the employee, this is why I offered them that line of insurance. They were not employed at any point in the year. They were employed, that sort of thing. We'll go through that. But that's going to come from your employer or your benefits administrator. So again, we're talking about different data points now, excuse me, than we were the first section of this tax return, and it's going to be tracked on a monthly basis, not annual. So let's talk about the series codes. Okay. So we have a number of different series codes here, and I chunked them out into which ones we thought were going to be pretty common and which ones were not going to be common. So on a monthly basis, you're going to have to say, you know what, I used code 1A, right? I offered this employee minimal value insurance at less than 9.5% of the federal poverty level, right? And that happened, in my example again, from maybe January through June, right? Well, then a life change happened, right? Now I've got a spouse and dependents. That happens in June. I've got to change my offer, my code from 1A to 1E. So that's why on a monthly basis you've got to track this. We also have, maybe I didn't offer coverage to my full-time employee. And so the most common we feel are going to be 1A, 1E, and 1H. And 1I here is, we made no offer to the employee, but the employer is using a qualifying offer relief. That's still kind of, I don't know what that one is in relation to yet. So surprisingly, the IRS has tax returns, and they're a little hard to understand. So that's how we break out the different codes. The different codes are, what did you offer the employee? Okay? So let's talk about the safe harbor codes, right? So this is line 16 in relation to line 14. Why did I offer them that series? And I offered them that series because, you know what, they were enrolled in coverage. So I'm going to use 2C. For the most part, 2C is going to be what we think most people would use. Or I didn't offer somebody coverage that month because they weren't employed that month, right? Well, that makes complete sense. And think about that, right? So you've got somebody that works for you for maybe 6 months of the year. This tax return is an annual tax return, so you might have 6 months of offerage codes, and then in month 7, we're going to change our series code to say that we didn't offer them coverage, and now you have to explain to the IRS, why didn't you offer them coverage? Well, I didn't offer them coverage because they were no longer employed that month, or they were part-time or termed that month. So again, it's a little hard to relate unless you've got the tax forms in front of you, but I think there's going to be a lot of confusion around how do we track this on a monthly basis so that in December and in January you are not having to dig through every employee change from an insurance coverage standpoint. So let's talk about Part 3. This is a pretty interesting one as well. So if you provided insurance, you need to notify the IRS of who was covered under this insurance. So it's not just simply saying that I offered David coverage. You need to say I offered David coverage, and then his wife and his children were also offered coverage. And so you've got to list out the names of covered individuals here, 17, 18, 19, which individuals were covered under David's insurance. You need to gather their Social Security number and or their date of birth. So the IRS is currently saying that you've got to ask employees for their dependents' Social Security numbers 3 times, right? 3 strikes and you're out. And if you can't get it by the 3rd time, then you can use that, that person's date of birth, right? And again, this is their way of trying to track whether or not that person has insurance, whether they got it from a state exchange or got it from an employer, and then if they were eligible for any sort of subsidies or not. And then you've got to indicate the month that they were offered coverage as well. So this all ties into how the IRS can track people and their coverages. But what I'll tell you is, again, if you've got somebody that's using just payroll, for example, payroll's not necessarily going, payroll wouldn't actually at all have dependent Social Security information. So this stuff's going to have to come from the client, or it's going to have to come from your benefits administrative piece. Okay? And then fully insured employers don't have to complete Part 3. So let's add some complexity into it, right? So that's going to be a big part of how you chase down information. So let's talk about, I already mentioned the data is going to come from your benefits administration piece. Again, lack of sleep. All right, so that's the 1095-C. Much like a W-2, the 1095-C goes to every full-time equivalent of an applicable large employer. Now, for those of you that are familiar with payroll, when you have a W-2, you have a W-3, right? And a W-3 is a summary of all of your W-2 information. Well, the IRS, in their infinite wisdom, decided that if we're going to have a 1095-C that goes to every employee, we're going to have a 1094-C. And a 1094-C is the employer's summary of their 1095's information. So just keep it simple. You got a W-3, you have a W-2. If you have a 1095-C, you have a 1094-C. I wish they would have gone in order. It would have kept it a little easier, but, you know, that's the IRS. So the 1094-C is the transmittal form for all of our 1095s. And let's talk about where that data comes from. So let's transition. If you have a 1095 form in front of you, you should now switch over to the 1094. So lines 1 through 6, this information is going to come from your payroll, right? So again, this is your company's name, their address, their EIN number. Lines 7 through 8, again, who will they speak to from a client standpoint? They want to know, who can we talk to about this tax return from a employer standpoint? Okay, that's going to come from you, right? Again, can't be your certified professional accountant, can't be your insurer, it's not going to be your broker, and it's not going to be your payroll provider. It's going to be someone at your company that you hate and is willing to talk to the IRS. Okay, lines 9 through 16, again, more employer information, and then line 17 is reserved for the IRS use. So we don't really know what the heck's going on with line 17 yet. Okay, and then line 18, you have to have some sort of way of understanding or knowing how many 1095-Cs you actually handed out, because that populates line 18. And so whatever system you're going to use to generate your 1095-Cs, that's got to match with the number that goes on here. And I would tell you, if you're using an in-house solution for payroll, I haven't seen a 1095-C solution from an in-house provider standpoint. If you're outsourcing to a third-party payroll provider, I would ask, what have they come out to tell you about how they're going to complete the 1095-Cs and the 1094-C on your behalf? You have to have a plan for this. You can't wait. And if they haven't come out to talk to you about it yet, to me, that's a really big issue. I know for us, that's why we're doing this today with Joe, and it's a very big priority for our firm to get out in front of every one of our clients. In fact, we hired a special group to make sure that we touched every applicable large employer and had this discussion with them about what's our strategy and what's our plan. So part 2, you know, a few years ago, when the Affordable Care Act first came out, and I think it's been actually in effect for about 5 years now, and that's scary in and of itself. You know, employers heard this, oh, well, you know, it's 50 employees or more, and I've got 150, but I've got 4 locations, so I'm going to be smart, and I'm going to split up my, you know, 4 locations into each ID number with 150 employees. Now I'm going to have each Fed ID number with fewer than 50 employees, and I won't have to comply with this. Well, somebody told the IRS that that was a strategy that businesses were employing, and so the IRS is now asking you on the 1094-C to self-report, are you an applicable large employer? If you are you part of a group? So if I have, 3 businesses with 45 employees apiece, well, guess what? I'm actually a 135 employee company now in the eyes of the IRS, and a control group. So the control group definition from a retirement plan standpoint and a benefit plan standpoint applies to the ACA. It's not a new definition. So if you have employers that are part of a shared group, a control group, that's absolutely the way that it's going to stay. So you've got to self-report that. So lines 19 through 21, who's filing the returns for their group, that's going to come from you, right? And then if you file under one of 4 filing methods, so filing methods are, I'm in a transitional relief, right? My benefit plan ended mid-year, and I've got a little bit of a transition time, or I'm making a qualifying offer to everybody, or I've made offers to 98% of my staff. Those are going to be pretty easy questions to answer. That's going to come from you or come from your Ben admin piece. So the IRS thought, you know what, that seems a little complicated, everything that David just talked about. So we're going to make it easier, right? We're going to have these special reporting rules. So if you offer minimal value coverage to 98% of your employers, if you make a qualifying offer to your employees, you can just enter code 1A, and you don't have to provide information in line 15. So they're saying, okay, so if you're gonna make this qualifying offer, then we're going to require a little bit less information from you. You can provide a simplified statement to the employees instead of the 1095. However, it really has to have the same information that the 1095 has, and I haven't really run into somebody that's decided, I'm just going to make my own simplified statement. Forget the IRS one. It's easier to make my own statement. So the majority of people, even if they're making a qualifying offer, we're finding are still planning on actually using the 1095-C, because really that's what the IRS has designed. And then self-funded employers can't use the simplified statement. They want more information from them. So the 98%, so these are the special reporting rules. If an employer offers minimal value coverage to 98% of their employees, they do not have to provide the number of full-time equivalents by month in column B. So again, they're trying to dull down the amount of information you have to put. However, it's still relatively the same amount of information. It's not going to save you guys that much time. So let's talk about Part 3 and Part 4 from a 1094-C standpoint. Part 3, did you offer coverage to 95% of your full-time employees? And that's going to come from your insurer. Column B, who are the number of full-time equivalents that you have? Okay, that should come from your payroll provider. Okay, so also the total number of employees that you have, that should come from your payroll provider or your internal payroll administrator. You're also going to need to show, is the employer part of a controlled group? So surprising, if you've ever been through a tax return before, they tend to ask the same question more than once. Here we go again. Are you part of a control group as an applicable large employer? That's going to come from your benefit administrator. That's going to come from potentially you as the client. And then, are we using some sort of transitional code relief? Were you a 50 to 99 employer, or were you a 100+ employer, and there's some other reason why you're in a transition? So again, all 12 months would be pretty easy, but if you've had any sort of changes to your employee counts, you're going to have to educate the IRS on that information. And then you're also not only going to have to answer, yes, I'm a part of a controlled group, you have to indicate to the IRS the names and EIN numbers of the other members of your control group. So this is just the IRS's and the Department of Labor's way of tracking, are you fulfilling your obligations as an employer and offering insurance to employees, and then they're going to determine if the individuals and the employees have actually enacted coverage. So before we get to the questions, we'll summarize here a little bit for you. I know we went through a lot of information today. Our objectives were, determine if your firm's impacted by this regulation, right? So also provide education on the 6055 and the 6056. Again, I sort of contradict myself by saying don't pay attention to those things because really you're most concerned about the 1095 and the 1094s. You've really got to determine internally who's going to be responsible for this information. Not only are you going to put somebody's name on these tax returns to talk to the IRS, but because this data tends to live in different areas, how are you going to collect it all, and who's going to be the point person internally? Determine who's going to be responsible for filing the 1094 and the 1095. Also, deliver a plan that's customized and affordable to your individuals. Document, prepare, and process your 1094 and 1095s. Make sure that you're assisting your payroll provider, and I would even reverse this and say make sure that they're assisting you, right? There's information that you have to provide them, but they should be reaching out to you to come up with a game plan. And then lastly, make sure that we're involving your HR administrative service or system to make sure that you're getting the information from a benefit plan offering. Want to talk about this, Art?
So then we kind of put this together, and obviously it's extremely, as complex as it is, and one of the things that we've, as a benefits firm, have found is that any of our current clients that are, in this, I guess we'd call it loophole, IRS loophole, and it's heading their way and it's heading quickly, everybody seems to be thinking the same thing. It's my benefits person's going to handle this, or our payroll is going to handle this, or internally we use an internal payroll system, we'll just figure it out from there. We see a lot of, not negative finger pointing, but expectations. So what we want to do is kind of just make it clear in how we can assist you and what we can do for you as a local benefits firm. We can provide benefit admin tools if you need it. We can, again, use technology to provide great reporting tools for you that you can use internally. In those tools can report the ACCA reporting in a legible and clear and uploadable analytical form. So these tools can then create the ACCA reporting. We can also be the bridge to a superior payroll provider that delivers cost-effective service. I will tell you that whenever something comes out from the government requiring tax filings or laws or any type of requirements, there's a lot of people out there that want to capitalize on this. And I have seen firsthand of just dramatic cost increases or dramatic shifts to different programs that some payroll providers are creating out of this new IRS reporting requirement. What we did is we sift through the payroll providers that obviously are broker friendly, that want to work with us, so we can provide data to them, help them, and create a solution to this problem. And then we also look for not only the broker-friendly ones, but also the ones that are cost-effective for the clients and are not capitalizing on this. So we've done our homework when it comes to that, and come up with superior payroll providers. And I do believe that they're the most cost-effective players in this area after looking through the costs and what they're charging their current or new clients. We can also help with your filing assistance for the 1095 and the 1094Cs. If you're not using our bad admin tools, we can help you figure out what's the best solution for your setup. And then either bring in a payroll provider or bring in someone that specifically only does 1094 and 1095, kind of a la carte, if you like. The best thing would be is to say what's the best solution not only in our personnel, but what's the best solution in our pocketbooks, and what's going to cost. What's the most cost-effective way of getting this done? Sometimes the a la carte method works. But,
so we go out. I'm constantly talking about ACA compliance, and when you think about how people learn, a lot of people are visual learners, and so the best way I can describe all of this, information gathering, is through our little flow chart here. So ACA compliance, again, you're going to get information from 4 data points. You're going to have client or employer data, you're going to have payroll data, and you're going to have open enrollment and then time and attendance data. So what employer data? Again, name and contact number of the responsible person at your firm that's willing to talk to the IRS about the tax returns, whether or not you're part of a control group and any related EINs, and then the filing method, right? So the filing method, again, that 98%, the 95%, the minimum value coverage. Payroll data, pretty easy, right? So this is employee social security number, number of full-time equivalents. Open enrollment data, this is your offer of coverage. So remember line 14, what offer of coverage did I give the employee? The amount of the employee share for self-only, that's line 15, okay? The coverage, our safe harbor codes, that's line 16, right? And then any employer information, transitional code relief. And then when you think about time and attendance data, this is typically your measurement, stability, administrative period, and any sort of applicable hours that the employee has worked. All of this information is dumped into this ACA blob, right? And what comes out is reporting, okay? So again, this is not so much anymore from what I find an insurance offer issue. This is now a reporting issue for most employers, especially those that are ahead of the game. So there's a couple things that you need to answer, right? The first question, am I an applicable large employer? Which of my employees are eligible for insurances? Are my benefits affordable? And then what's my measurement, stability, and administrative period? And if we're an applicable large employer, well, guess what? Now we've got this 1094 and 1095, okay? So the 1094C, again, employer info, their FEIN, the contact name, total number of 1095s, any related EINs, the number of full-time equivalents, and then your filing method that you've selected. And then your 1095, this is going to be, again, employee info including social security number, employee dependent information including their social security numbers. You got to try 3 times, and if you can't do that, you got to get their birthday, which, how are you going to get their birthday if you try 3 times to get their social security number? I still don't know that part. Any employer number, the offer of coverage. And so the issue that we see here is this isn't linear. This information is grabbed from 4 different places, and then it's dispersed amongst a couple different tax returns. So the challenge is how do you really stay compliant, right? And a great solution is obviously creative benefit strategy. So creative benefit strategy is going to be able to help you with the open enrollment, the benefits administration tool. They can help you with the measurement stability periods and also our hours tracking. They can handle the reporting issues, 1094 and the 1095. And so I feel like where Paycor might fit in is obviously up in this payroll bucket here, but you've got to have a plan in place and understand where you're going to get this data from, how you're going to comply from a tax standpoint, and ensure that the IRS doesn't knock on your door and have anything to find. So before we wrap, we wanted to open it up for questions. So you guys have all been on mute so far. I don't see any hands that have been raised. Oh, there are a couple questions. So let me open this up and let's start giving you guys the chance to ask us some questions here. So give me a second here. My webinar needs to catch up. It looks like, can we start with Carla? Carla, you had a question?
Yeah. Well, on the 1090 part 2, can you hear me?
Yep, we got you.
Okay. On part 2, if we offer an employee coverage and they waive, we still have to do a 1095C for them?
Correct.
And what about COBRA? If they terminate and stick on COBRA, do we have to put, is there a COBRA field, or they're just terminated?
You know, there isn't a COBRA field, and I haven't had that question yet, so I actually have to research that one for you, Carla. That's a good one. There isn't that I found an accommodation for that on these tax returns yet, but maybe the IRS just didn't think about COBRA.
Sure, they're going to have to because it's continuing.
Yeah, it's continuation of benefits, right? So let me see if I can find that out for you.
Awesome. And the second question that I have, currently, you know, we're a small employer, we're a staffing firm, so we have a lot of people in and out.
Yeah.
Is there, I know QuickBooks will not prepare these forms for us. Is there a software program out there that we can track this information that would make, like would sync into these forms to fill them out, or do we have to fill each one individually, manually?
I
for the
haven't seen
1095
it.
fee.
I haven't seen it,
So
but
that-
I know Joe has some options.
Yeah. Right
Okay,
now, there's,
all right.
I don't know of an employer, I guess you would call it like where you would purchase a employer license software to deliver. I do know that there's a la carte methods that you could use that a company will take it, upload it from QuickBooks, and provide it for you, Carla. You know, so
Okay.
there's a one-stop shop with Paycor that'll deliver payroll solutions and take care of it. And then there's one that we have that if somebody said, listen, we're going to remain with QuickBooks and we're into this contract, whatever the case may be, we have an a la carte system that can deliver for that. You know, I think the portal, the way that Paycor has it is pretty nice and pretty sharp and pretty competitively priced. But if for those that want to just keep this and keep their current payroll situation, there is a provider. I have not seen a piece of software yet.
Yeah, I don't know if that's on the QuickBooks roadmap, and you know, I'm not on QuickBooks website every day, but you know, when you think about QuickBooks typical employer or typical client, I think they're probably between 1 and 20 employees anyway. You know, the higher the employee count, the more that those employers tend to buy a more robust system off the shelf or outsource it. So you might want to ask QuickBooks if they're going to have something for you from that regard.
Okay. Do you know when
like
the
our-
2015?
I'm sorry, go ahead.
Do you know when the 2015 forms will be available? If we could start filling those out early.
They're available. So that the form that you have, you should have had emailed out to you. Those are your forms. So you can.
But it says 2014.
It says 2014 on the form.
Yeah.
The update of that, we'll provide you with the update of that.
Sorry about that.
Okay. Oh, that'd be awesome, because then we can kind of
Yeah.
get ahead of it, and that would be good.
Yeah.
The form is the same form, so.
That's what I figure, but you know, the IRS, if it says 14.
That's to be used as a demo anyway, so.
Yeah.
Right, right. Okay, thank you.
All right, no problem. It looks like we had Stephen Kroll with a question.
Steve?
I don't know if we still have Steve on.
Steve, are you there?
I've actually got Steve's question up here. Steve's question was, does this apply to health benefits paid under collective bargaining agreements? Who's responsible for filing? And so I haven't seen anything definitive from the IRS from a union standpoint, but who's providing the insurance? Is it the union or is it the employer? And from what I've seen by talking to other people, even though the union is the one that's providing the insurance technically, it's the employer's responsibility to complete the 1095-C. So I think that's a conversation that the employer needs to have with their union representatives, but from what I'm hearing, that responsibility is falling to the employer, because the employer is the employer, for lack of a better term. It's their employee, so they'd be the ones responsible for reporting on their behalf. He's also asking, are you telling us now that employers have to track every marriage, adoption, birth, or whatever for every employee? And if it impacts insurance coverages, yes. You know, and I would tell you that you're probably managing that anyway, because but you're probably not keeping track of it. So when an employee changes insurance coverages, you're a part of that conversation anyway, right? But you're probably not tracking it and reporting off of it. And so the answer is yes. If there's a change to the if there's a change to the employee's offer of coverage, you're going to have to track that on a monthly basis and report it. So I hate to be the bearer of bad news, but blame the IRS and not me. It looks like we also had a question from, let's see, Jim Broderick. I guess he's saying that the court just upheld the subsidies 6-3. So, you know, that's doesn't really. I guess everything stays as it is. You know, that's the thing about these ACA regulations is it changes mid webinar sometimes. Looks like we also had a question from. Let me make sure I get everybody here. We got Carla. We got Jim. I think Andre was just telling us that he could hear us. Is there anything else that question-wise that you guys had on the phone for us today? We're okay time-wise. We're a couple minutes out, but we can go over if we need to.
I'm okay.
Okay.
Okay. Well, you know what? Again, for the sake of fast-tracking this, we're right on for an 11 o'clock ending. I just kind of want to wrap it up by, first of all, thanking Dave from Paycor. I think he does a nice job at delivering it. We tried to deliver it in a fast-track way, arm you with the data in your handouts. The handouts being 2014, they're the same for 15. In fact, it's probably just as effective as having sample put across the front. But we wanted to at least arm you with the data to start questioning what's going on and how we're going to approach this as the deadline comes quickly towards the end of the year. I guess the takeaways would be, create some type of tracking system now. What I'm seeing a lot of, and I know that some of the CPAs on this call will look at is everybody's wondering who's going to do this. How are we going to get all this done? What we're here to do is, we're here to basically, at CBS or Creative Benefit Strategies, to quarterback solutions for you. We do it a lot on the retirement plan side, and we're looking at this as one of those types of team-involved efforts as our retirement plans are, where you have the carrier, where you have the employer, and then you have an administrator, whether it be Paycor and their with their payroll, or an outside third party, a la carte, as I referred to it earlier, administrator of this new, we'll call it a situation, I guess, that we're going to have to deal with over and over in these new reporting requirements. So let us be your contractor, so to speak, to figure out what's the best way to approach this and what's the best solution to use. We welcome any of your calls, and we also want to leave you with the fact that thanking you for your attendance. You're going to get a follow-up email in the next day. We have a real quick survey on there. We would love your feedback on how this all worked. With that, we thank you again, and thanks for attending.
Yeah, thanks everybody. Have a great rest of your day.
Thank you very much. Thank you.